Alright, in this video, I'm going to go over this real quick. I'm going to try and not do any cuts. I'm just going to try and get through it as fast as I possibly can because I have a lot of questions about this and I've been using it. It's stutter work. It's been two of my best confluences I've been using recently. So let's get into it. I'm sure you guys have heard of it. What is consequent encroachment? Also known as CE. People like to use big words in this industry to make themselves sound smarter, and they're really not that smart. Consequent encroachment literally just means equilibrium. If I could type, of a wick, a significant wick, whatever. So, get that down. Consequent encroachment, CE, literally just equilibrium of a wick. Alright? So now, let's get into what is the Fibonacci Retracement Tool I use that is the 79% extension. All that is literally just a Fibonacci retracement tool that helps me enter trades, know where price is going to go to, etc. So now that we know what the Fibonacci retracement tool, the 79% extension is, and consequent encroachment, equilibrium of a wick, now we know what that is. Let's get into the chart. I'm going to show you a trade that I literally just took that pretty much were only these two confluences. So coming into market open, that was all this morning, right here. We left data lows, didn't come and sweep them out. You see data lows right here because we had 8:30 news, whatever. Data lows did not get swept. We just came all the way down here, sweeping out internal lows, and then started pumping. So you guys know our strategy if you're in the Discord. We did not get a trend break, but I wanted to catch a trade, and I seen that if I just caught a trade with the trend, that it could work out. So what did I do? Hourly chart, let's reset it. What do we see on the hourly chart? All these internal stacked highs that got swept at 8 a.m. Alright, cool. But we also swept out this internal low. So we're playing in a daily gap. So over here, daily gap, hourly lows get swept. So we know we're going to go bullish. Right here, 1 hour gap. Alright, go down to the 15-minute. What do we also see? Overlapping 15-minute gap, overlapping 15-minute BPR. So what did I see? See, we might have a trend break. We're ripping. We're going to go. We know we're going to go bullish, but there's really nowhere to enter at. So what did I see? I was like, all right, let's try and catch a trade. Right here. Bang. I said, all right, perfect. Cool. We had this little break. Swept out all this internal highs. Then we had this tiny little pullback right here. So what did I do? I took my fib, marked the low to the high. Then I was like, all right, let's just see if we can get a retracement. What do we see? The fib pulls back perfectly into the golden pocket. That's 79% extension, whatever you want to call it. Holds it 1, 2, 3 times, and then starts pushing back out. So after I see that, I'm like, all right, perfect. We came, had a little retracement, tapped the golden pocket perfectly. So now what do I see? I'm going to mark out. And if we're taking our fib, I'm going to just get this out of the way. We're taking our fib, like say we're looking for longs. We want to take our fib, like to see a retracement, we want to take our fib from high to low, or from low to high, I'm sorry. So if I want to see price respect the golden pocket, I want to take it from the low to the high. Right there, respected it. If I want to see price break the 79%, there's two ways to use the 79% extension, this Fibonacci retracement tool. You can use it like this, where you just see where price is going to pull back to, golden pocket area, and then if it gets broken below, you can see, all right, now we're going bearish. Or you could use it like this. I used it in both ways this trade. So look, all right, pull back perfect, golden pocket gets held. What do I also see? This tiny little swing high to swing low. Mark out the fib right there, because we know that price is going to want to come back into the 79% extension if we want to go lower. So what do we see? Price closes above the 79, leaving behind, what do we see? A change of state and delivery. Leaving that behind, and also inversing this gap eventually. So once I seen that we came back, we didn't inverse the gap yet, but once I seen that we came back, held the golden pocket down here, now we swept internal highs and broke above the 79. And when I wanted to see us pull back into the 79. We pull back into the 79 on that CISD. I enter longs with my stops right here. What am I also targeting? So get rid of all that. Now that we used all that, where am I targeting at? This is where we get into consequent encroachment. So I had this marked out as just like You could have taken partials here because that's kind of a significant soak wick hammer candle. And you can see we pulled into it and then we came out rejected, but then we just broke through it. So I didn't really care about that. I was more so looking at this hourly candle, like we came back to earlier. What did we see? This hourly gap, 15-minute overlapping, all this, yada yada. So what do we also see though? This consequent encroachment, significant wick on the hourly. All right, perfect. Had that marked out. So that was literally my target for this entire trade. We seen pullback. All right, perfect. Golden pocket gets held right here. Bang. What do we also see? 79% extension gets closed above, and then it gets tapped back into. Overlapping CISD. I go long. Right here. Stops underneath this candle. Targeting consequent encroachment of this hourly wick. I'm going to go over my levels real quick. Not my levels. So, look, I use the Gann box for CE. Equilibrium. These are my settings. You want to screenshot it, whatever. Pause the video right there. Bang. That's it. Also, for my fib, these are my settings for my fib. Screenshot. Pause the video. Do what you got to do. Alright, real quick, I'm just going to go over this one more time because I feel like I kind of went over it kind of fast and I didn't really explain it that well. 79% extension. You can use it for pullbacks and you can use it for the closure above. I'm going to show you how to use it for pullbacks and the closure above right now. If we are in an uptrend and you want to see you want to use a 79% extension for a pullback. Alright, right here, look, this is the trade I took. That is a pullback because we're in an uptrend. So if you want to look for a pullback in an uptrend, you want to take the fib from the swing low to the swing high. That's for the pullback. All right, got it? Now for the closure above, you want to take it from a swing high to a swing low. So we seen pullback. All right, perfect, held. Now for the closure above. When I say 79% extension closure above, I mean this. Swing high to a swing low because we are in an uptrend. And what happens? It does not hold the 79. We got a closure above. So that is technically like a break of structure to me. Now that we got that down, pullbacks and breaks on an uptrend, let's look at it in a downtrend. So if I zoom out, I'm literally just going to take some random point because I promise it'll probably show it, like right here. We're in a downtrend right here. All right, perfect. So take the high to the low for a pullback. Like I said, we're going over pullbacks right now. For the pullback, what happens? Swing high to swing low. All right. So we have our swing high, we have our swing low. Mark our fib out. Where is our golden pocket? Where is our 79% extension? Right here. What happens? Price comes, fills to 79, rejects, 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 then dumps back down. Now, for a break above, you see how we pulled it down for the pullback. Now for the break above, the 79% extension, or below. Break above. So what do we see here? Micro uptrend work. Well, let's use this for an example. It's probably better. No. Yeah, this does work. Right here. Swing low to the swing high. So we see we have the pullback. All right, perfect. Pullback's working. It's holding right here. So now let's take this swing low to the swing high. What do we see? Closure below. So 79% extension closure above is when we're in an uptrend. Closure below is in a downtrend. We know that is for breaks, okay? So we had the pullback. Now we mark it up for the break. We get a closure out of it. Does not hold it. So what do we wait for? Pull back into any of these areas. We can pull back into the 79. We can pull back into the 6-1. We can pull back into the discount of range. And that's what we did. We pull back into discount of the range, which is what is discount? Equilibrium. So when we're beyond equilibrium in a downtrend, it's discount of the range. So what do? What are we also in? This BPR. And as you can see, the fib, pullback, you could have shorted here. Put your stops right there. Or you could have shorted off of the extension closure. Waiting for the closure of 79, and then the pullback. Could have shorted here or here, and the trade would have overall banked for you. So, I feel like I just went over that pretty good. In an uptrend and in a downtrend, uptrend pullback, low to high, downtrend pullback, high to low, uptrend break, high to low, downtrend break, low to high. Simple enough? All right. That's it.